Glad to have you back there. It's the Business Daily right here on Trust Television. Now we look at issues around inflation numbers that was released yesterday by the National Bureau of Statistics. According to the NBS, inflation number declined by 1.3% from the previous inflation numbers, talking about January CPI. Currently, inflation stands at 23.18% in the month of February. This is coming after rebasing, of course, of the economy. The first inflation we're having after the rebasing of the consumer price index there. Let's look at this report. This report did analyze whether the inflation number is indeed having an impact on the Nigerian economy. How are Nigerians feeling? How is prices of things in the market? Are they increasing or they are dropping? This report did speak to that.
Nigeria's headline inflation surged to a staggering 34.4% in June 2024, worsening the already harsh living conditions in the country. However, in February 2025, the rebasing of the Consumer Price Index (CPI) by the National Bureau of Statistics (NBS) now reflects a decline in the inflation rate to 24.84%.
Now, every economy have a base year. So what do you mean by base year? When cost of items of a particular period is being considered to judge or to base your economy upon. So for instance, in Nigeria, our last rebase year was like 2013 or so, and every 10 years it is statutory that you rebase your economy. So if a bag of gari is 10 naira as at 2013, it is ideally that after 10 years you are expected to change it to the current year. So in this our current Nigeria now, we were using 2013-2014 price based year, but currently now the government now said after 10 years let's rebase. We now rebase back to 2024. So 2024 is now the yardstick to compare other prices in Nigeria.
Despite this decline in official figures, many Nigerians insist they have not felt any relief in their daily expenses. Philomena Nkechukwu, a food vendor in the heart of Abuja, has been struggling to keep her business afloat amid soaring prices and economic instability.
The true situation is that, of course, there is reduction in price of foodstuffs in the markets, but the price of things have not reduced in such a way that it will begin to reflect, have true effects, on the things we are buying. Like, let me say, for instance, a mudu of egusi that we used to buy 3,000 is 2,800, 2,009. You can see that the reduction is very minute. The reduction is very small compared to when we are buying a mudu of egusi 1,000, 1,005. You understand? The increase was much, but the reduction at the end of the day was minute and it's not having any good effects.
Farashi dai ana ta maganganun farashi suna sauka to kaɗan dai amma ba.
There are discussions about the reduction of food prices. Yes, this is true, but that's not the case in prices of other commodities. For example, the price of beans has reduced to about 1,700 and 1,800 naira. But some of these decline in prices of food are mere speculations. The prices are not dropping as expected. While economists argue that ordinary Nigerians may not immediately feel the impact of lower inflation rates, they note that these figures will influence Nigeria's economic profile on the international stage.
We can now attract more foreign direct investment. An investor will now say, okay, the economy is not doing bad, let me come and invest. But what is the impact compared to citizens? It does not make any difference for somebody in Nigeria, because the price of gari, the price of beans does not really affect it. Some people were even making a caricature of it that now that they've rebased, that means everything should also crash down by 10% or what have you. It is not correct. It is only figure of based year that change. The price of items still remain the price as it is. It does not affect anything. It does not bring more money.
For now, experts advise Nigerians to remain cautious with their spending as economic uncertainties persist.
Interesting reactions there from Nigerians. There you could hear some of them saying it's just like you take 100 naira from somebody, and of course, at the end of the day, start giving the person five naira to see maybe how the whole thing look like. Let's get the reaction to this. Now, I'm being joined via Zoom from Lagos by Adegboyega Adebajo. He's an economist and also an investment banker to react to the inflation numbers released yesterday by the National Bureau of Statistics. Good morning, Mr. Adebajo.
Good morning, Yusuf. Hi, how are you?
Very well, good to see you. How is Lagos this morning? It's quite hot here in Abuja.
Well, rather humid compared to Abuja, and I miss the dryness of Abuja despite the heat.
Absolutely. Let's quickly get your reaction to the numbers released yesterday by NBS. We've listened to some Nigerians who are saying that it's like somebody taking 1,000 naira from you, and at the end of the day, the person start, giving you five naira at the end of the day. Will you feel the impact?
Well, and I listened to the documentary not so long ago. There's something very important here which we always need to reiterate when we speak, and it's essentially that inflation is a measure of rate of change. Just that inflation drops doesn't mean prices will reduce. And remember, the index we all look at, the rates, is a measure of the composition. So yes, food prices are coming down in the north, but I can assure you that hasn't even been reflected in Lagos yet. You also have a case where you might want to look at some other items. Headline inflation tends to measure food and energy. Petrol has come down, food prices have come down at source. These haven't necessarily translated to the consumer. And when I talk about translating to the consumer, I mean transport costs haven't come down simply because fuel prices have come down, and prices in restaurants have not come down yet. And in some markets, despite the fact that food prices at the source have come down. Other elements of core inflation like housing will probably remain high because prices of those type of assets are still going up. People are acquiring new real estate at a much higher price because these are assets that are seen to be able to give returns and appreciate beyond the value of inflation. So that's the situation that has led to just a slight decrease in inflation. But let's not forget, we have to live with the rebasing. It's something that is required to be done after a period of time. Yes, it would affect its credibility in the perception of some people, but it still remains the official figure.
Indeed, we have to live with rebasing there, like you rightly pointed out. But if you look at the numbers from NBS, it shows that inflation dropped by 1.30% from what we had in January. In January, it was 24.48%. And of course, if you look at the numbers in February, 23.18%. The difference is 1.30 percentage drop there. Now we're looking at it in a way that I'm trying to understand. I understand we're using the 2024 as our base year now. If you look at inflation numbers, as at this time last year, of course, it's 2024, it was around 31% or thereabout. But now, as of today, we're having a difference of about 8% in terms of margin. Are we really being realistic by using that as a yardstick for measuring the inflation numbers or the performance of the economy largely?
Yusuf, I would agree with these figures for one thing. Again, it's a measurement of the rate of change. The change between last year, February, and this year, February, is 8%. It's as simple as that. But that's essentially because despite the drop between the December figure and the January figure, the rate of change, it's still saying prices are going up. It's just that they aren't going up as quickly as they did in 2024. And you and I know that 2024 was incredible. Their prices are changed within a week. some items had price changes within a day. Essentially, in 2024, a lot of landlords gave notice for increases in rents, if starting from 2025. So that impacted the rate of increase in 2024. 2024 was also the year we saw petrol pump prices peak at over 1,000 naira per liter. They're 100 now, and they're still maybe coming down. But this has indicated to us that yes, there's still price increases in the economy, but the rate at which they're increasing is slower. And I have no doubt that the appeal at the start of Ramadan to try to moderate prices is an appeal that was heeded by most traders and trading persons. And so prices have not really risen that much, and they have in fact come down.
Indeed, talking about prices have indeed come down gradually, but the impact, like you said, is not being felt even where you are in Lagos, especially in the area of transportation.
No, it's not.
Down in Abuja here, in fact, transporters are even charging more now, and at some point I do ask them, the cost of fuel is coming down. Why are you people still, increasing cost of transportation? Many of them don't seem to have answers to some of the questions that we ask. Nigeria is becoming like a country where the law of gravity doesn't apply. What goes up doesn't come down in this part of the world. Should we, in a situation like this, not allow prices or things to go up at all?
Okay, so part of the research I've done recently, Yusuf, is to look at Nigeria in the past and see whether we have historical parallels for this. I remember when the structural adjustment program took place, okay, we had inflation that was significantly high, higher than what we had before. Remember when the naira to the dollar went from 80 kobo to 4 naira? It was pretty much like the whole world was going to come, down and all. It was terrible. But what was essential at that time of the structural adjustment program is that the government undertook measures to directly soften the impact on people. Okay, we also had a situation during the political crisis between 1993 and 1995 where things shot up significantly in terms of prices. The exchange rates, parallel market stuff, everything was a bit, topsy-turvy. But at the end of the day, affordability stepped in. And I think the clear message here that is that as much as possible, we need a situation where some measure, some policy that can actually reduce the impact is felt by the people. So something needs to be done. I'm not in favor of price controls, but like you said, those who have the at their disposal the authority to determine prices in their trades do not seem to consider the importance of what this means. That's the situation. So yes, we've got historical precedences in the past, as close as possible to what happened, but not necessarily. So at the end of the day, we have a situation where affordability becomes the measure. And how can Nigerians start to afford this? Once they can afford this, they will be in a better situation to be able to deal with the impact of inflation.
Indeed, as we wrap up this segment now, let me ask you, this is definitely going to have a lot of influence at this CBN next decision. But before that, let's look at the trend. How long do you expect this trend to continue? Are we going to see inflation on the continuous along this line that we've witnessed in February after rebasing? Don't forget the target for this year, if you look at the 2025 budget, is around 15%. Are we likely going to achieve that? I mean, whatever we do now, we must have to make reference to the rebasing.
Yeah. 15% is pretty tight. There's a lot that can happen. You just need certain external shocks that affect the price of petrol. It's going to affect, that will certainly affect inflation. And for it is worth, we need to look in terms of whether or not agricultural production can be sustained and even increased. One thing is clear, the insecurity in the north is reducing, and one is hoping that this will be reflected in production. If it's done, it is a fantastic thing in terms of moderating inflation and keeping it down. I see a range between now and June. We should be somewhere between 19 and 21, and I'm probably bold enough to project that, because the expectation of everybody, we're all tired of the increases, and most persons will want, whichever way they do, to be able to stabilize prices as much as possible. So only those things like the headline inflation elements of energy and of food, those are the key items that can actually trigger an increase in inflation. And by the year's end, will we have achieved 15? Well, the jury is still out on that. Let's just keep our fingers crossed. Not hold our breath, but keep our fingers crossed till then.
All right, but if we can achieve what we're having now, 1.30% in within 1 month, I think we can actually achieve 15% before the end of the year if the trend continue this way. I must thank you for your time. Adegboyega Adebajo, economist, investment banker, speaking to us all the way from Lagos. Thank you for your time.